Good morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agam Vakil. First, the headlines. The sell-off that wiped out the year's gains from global equities continues in Asia today as authorities around the world struggle to keep coronavirus from spreading. Oil plunges the most in almost 7 weeks as the worsening virus outbreaks fueled concerns that global economy will falter. And Donald Trump will, of course, meet Prime Minister Modi for bilateral talks today in India. And violence erupted in Delhi just hours before Trump was due in the Indian capital as pro and anti-CAA protesters clashed. And JSW Steel's acquisition of Bhushan Power runs into yet another legal hurdle. A former chairman of the stressed company challenges the deal in the Supreme Court. Now, the U.S. equities face the worst slump in 2 years as coronavirus fears spread. Bloomberg's Renita Young reports.
U.S. stocks closed down on Monday, sinking the most in 2 years, and the S&P 500 plunged 3.4%. This is all as authorities struggle to contain the coronavirus from spreading even farther than more than 30 countries. And this also happens in the middle of corporate earnings season. One of the latest companies to report was Newmont Mining, reporting better than expected results and upgraded at CIBC as a result. During the session, however, FANG stocks and cruise stocks all sunk lower on coronavirus concerns. Something else that slid on coronavirus concerns, WTI crude oil. However, gold rose on those same concerns. Since investors see gold as a safe haven asset, they wanted to store the value of their assets, so they bought more gold, sending it closer to $1,700 an ounce. Treasuries also rose, since it's also seen as a safe haven investment. And that's a look at your Wall Street action on Monday. In New York, I'm Renita Young for Bloomberg News.
Well, let's look at Asian markets now. And for now, we are looking at a little bit of weakness coming through, a follow-up of what we have seen over the previous couple of days. And of course, we'll be tracking more on that one. But moving on, over 80,000 cases of coronavirus infection have been reported, and reports from Italy to Iran have sparked concerns of a pandemic. Let's go across to Bloomberg's Rosalind Chin in Hong Kong for the latest. Rosalind, good morning. What do you have for us?
Well, indeed, the number of cases spreading globally is what is weighing on investors' minds. And of course, we've got many of the Asian markets here following. Wall Street lower as well. The MSCI Asia Pacific down by about 1% or more at this point in the session. And that is really the story today here in Asia Pacific. Most of the markets here in the red, with Japan, of course, back online after a holiday yesterday and playing a little bit of catch up. The risk off tone really coming through. The Nikkei is down by more than 3%, and the Topix down by 2.7% at this point in time. The yen, of course, as a haven, seen as a haven, has been strengthening. It's currently at 110.98 to the US dollar. Now, as you mentioned, the number of cases has topped 80,000, and in fact, the South Korea area is in fact one of the main, I would say, epicenters for the virus outside of China. There are around nearly 900 cases there now. The number growing every day. The latest number reported was that there was an increase of 60 since yesterday. That, of course, is making people even more nervous about traveling there. The U.S. Center for Disease Control did warn its residents in the U.S. to avoid traveling to South Korea unless absolutely necessary. And we've also had, of course, the spread to other countries in the world, including places like Bahrain, Afghanistan, and Kuwait as well. So that is, of course, increasing investors' concerns. Now, we are also seeing that there have been a slowing slightly in China of cases, but of course, because of the surge in overseas cases, that is what's sparking concern overall among investors.
Rosalind, thank you so much for joining us and getting us that update. But we shift focus back to Donald Trump, who's arrived in Delhi last evening, while yesterday was all about festivities and a visit to the iconic Taj Mahal. He has a lot on his plate today. Before leaving for the US, Unni Krishnan of Bloomberg News has the details.
Good morning. So today is the second day of President Trump's visit to India. Yesterday was the visit which marked a lot of festivities. He made this rousing speech at the Motera Stadium in Ahmedabad. About 100,000 people turned up at the stadium to listen to Prime Minister Narendra Modi and President Trump, where he underlined the importance of growing strategic ties between the two nations. And that would be exhibited today when the bilateral part of the official part of the visit kicks off. President Trump would start the day with a ceremonial reception, followed by paying respects to the father of the nation at Rajghat this morning. And then subsequently, in the afternoon part, he will be holding bilateral talks with his counterpart, Prime Minister Narendra Modi. On the agenda, there's a host of agreements lined up, prominently a $3 billion deal for supply of military hardware, which includes 26 naval helicopters and other military equipment. Also, another agreement for closer energy ties. Later on, President Trump would address a business delegation. There's a meet and greet at the embassy in New Delhi, and thereafter he would be attending a banquet hosted by the president, and he would then head off to the United States later in the day. So it's going to be an action-packed day today, and hopefully we'll see a host of agreements being signed in the afternoon when the bilateral talks happen.
All right, from there on, let's take a look at how well the impact of Asian indices may have on the Indian markets and how they did perform yesterday. We have Darshan Mehta who's joining us to take us through the cues. Darshan, good morning. What do you have for us?
Yeah, so basically it's very interesting because yesterday the US markets collapsed, Europe was down in trade. Today, as you pointed out, Asia is not doing well, but look at the SGX Nifty. It's up almost 66 points, and one of the key reasons is that the futures in most of the markets have managed to move up. So the Dow futures is up almost 250 points, positive, some bit of tweets coming in from Donald Trump indicating his view on the coronavirus and the impact on the United States. So the markets seem to have taken a positive cue on that front. So that's the trend that happened. But overall, if you're looking at it, the trade setup is extremely weak. Look at what happened in trade yesterday. 250 points down on the Nifty, and the sell-off was even as bad in the mid-cap and the small-cap end of the market. All 50 stocks of the Nifty 50 ended with a negative bias yesterday. Not for the first time, at least in the last 5 years. That's the first time that we've seen that happen. I don't know if it happened before that also. But the Nifty Bank and the Nifty PSU Banking Index were also down. The PSU Banking Index was down almost 2.7%, and you know, overall there was a big sell-off that happened. Metals, auto, so and that you could even see in the ADR side. The Vedanta ADR was down 6.5%, Tata Motors was down 5%, ICICI Dr. Reddy down almost 4%. So overall, all the ADRs were also down. Even, you know, counters like HDFC Bank and Infosys were down close to 2%. So the trade setup extremely weak at this point of time. Now, how did the fund flow man up? FIs sold in almost 1100 crores in the cash market. DIs bought in 500 crores in this market. Now, overall, if you're looking at what contributed, as I pointed out, almost all counters came out with a negative bias. The major contribution coming in from Reliance, HDFC, and ICICI Bank and TCS, the four large weightages on the Nifty and on the Bank Nifty. So the trend certainly seems to be on the negative side. Similar was the case on the FNO side. If you're looking at the futures, the Nifty futures saw open interest declined by almost 6%, and longs were getting cut, so open interest was down 6%. The Nifty futures have moved into a discount now. Similar was the case with the Nifty Bank. Open interest was down 2%, and long unwinding was seen. Now, what are we seeing as far as our markets are concerned? We are below the 12,000 mark, and again, you're seeing that call writers are active at 11,900, very active at 12,000 and 12,100. So there is enough writing, and put writers, even though at this stage are writing at 12,000, 11,900, 11,800 seems to be the first support that the market is looking at. In terms of what happened yesterday, obviously it will be the call writers which were active, and because of the 250 point fall, 12,000, 12,100 and 12,200, put writers saw shedding of open interest and call writers became aggressive, and that is why you will also see a big jump as far as the PCR is concerned. Now, if you look at The setup, the VIX was up 24%. You're looking at a 250-point drop on the Nifty. Obviously, there was increased volatility. The PCR moved down. It moved down from 1.39 to 1.10, given the fact that the call writers became aggressive and put writers were down. And we're coming back to levels of 1, which we saw a while back. So that's the trend that we're seeing on the FNO side. Stock-specific open interest built up on the futures. At least Wipro was the only one which gained on the. It's not part of the Nifty, and that's why on the Sensex that was the gainer. In terms of counters, you saw a bit of open interest decline. You had Ambuja Cements, which moved up post strong numbers and restructuring that came out, but all the other ones saw long unwinding in its positions.
All right, Darshan, thanks so much for getting us those updates when it comes to the futures and options space. And as you can see, there are some concerns coming through, evident in the kind of movement that we have seen for, well, a lot of these stocks. But speaking about stocks, let's get in Nikki Mirchandani to talk to us about those which have made the news today. Nikki, good morning. What's on your list?
Good morning, Agam. I'm going to start off with SBI Bank because on the exchange filing yesterday, it informed about the much awaited IPO price range. That's SBI Cards and Payment Services. The price range for the IPO has been set between 750 to 755 per share, and the bid offer period for all the anchors, it opens on March 2, closes on March 5th. The IPO could raise as much as $1.4 billion, and initially SBI Cards will offer up to 6.6 million new shares, while SBI and Carlyle shareholders, they will offer up to 130.5 million shares. We're also looking at HUL, again an index heavyweight here, where the board has approved the formation of 100% subsidiary. The company already has 12 existing subsidiaries where it has a shareholding in the range of around 75 to 100%. This, according to Macquarie, is expected to have some kind of tax benefits for the company. So we're expecting a positive move on account of this development. Tech Mahindra, a relatively small acquisition coming in there. The company has acquired a 100% stake in Zen3 Info Solution, which is an AI and cloud engineering services. $42 million would be paid up front, and $22 million that would be performance linked and spread over a period of 3 years. Morgan Stanley says that with the current revenue profile, this implies that the acquisition would just add to around roughly 1% of total Tech M revenue. So small acquisition coming here. Indian Hotel analyst meet where the management reasserted that it's pretty much on track to achieve the targets which have been set across for Vision 2022, and the focus remains network growth, margin expansion, balance sheet and brand focus. And it has highlighted that the opening and signing of contracts have been the highest ever this year. We're also looking at Lind India, where the numbers have been not so encouraging. Top line, we've seen a decline coming in. Bottom line, we've seen the profitability taking a hit. Net profitability of 635 crore has been reported as compared to 15.4 crore. This big gap that you're seeing is an account of exceptional item which is present on account of sale on slump basis. And last in the list, we're looking at TVS Motors, where the company has said that the coronavirus outbreak has impacted its Feb production, and that's expected to see a drop to an extent of as much as 10%.
All right, Nikki, thanks so much for getting us those updates. We'll be watching out for these. But let's not forget, there's lots to talk about over the course of the day, and you will find all the live market action on BloombergQuint. But there are also a few stories that you should consider reading on the website, BloombergQuint.com. Here they are. JSW Steel's plans to acquire Bhushan Power and has run into yet another hurdle, with a former chairman filing a review petition challenging the Supreme Court order which granted JSW the right to acquire the company. The Competition Commission has ordered a detailed probe against Make My Trip and Oyo for predatory pricing. On that note, it's a wrap on this edition of All You Need to Know, but there's lots more lined up. Stay tuned to BloombergQuint for more news and updates.